Well, Afgri reported a 15% decline in first half headline earnings per share to 31.3 cents. The agricultural services and diversified foods group saw revenue increase by 17.5% to 5.4 billion rand. Joining us now to discuss this further is Chris Venter. He's the CEO of Afgri. Chris, thanks so much for joining us this afternoon. As I've highlighted there, an improvement on the revenue side of things. It's failed to translate through to the bottom line, and that's seeing headline earnings per share coming in lower. Quite a few factors coming to bear here. We've had rising input costs, a drop in consumer demand, oversupply in the markets, and then margin squeeze as well. Challenging environment, to say the least.
No, absolutely, especially on the animal protein, which obviously includes our poultry business. I think on that side of the business, similar to other producers, we've seen some challenges throughout the industry. I think those industries are obviously tackled on various fronts. Just from a market point of view, definitely a slow demand, high imports, high raw material price in terms of the actual animal feeds. So that obviously is a bit of a combination of very strong and challenging environment. And
you've got your business as a whole having to deal with quite a couple of double-edged swords here. I mean, when it comes to the high maize price, the positive is that it's had a positive impact on farmers' spending. The negative is that it's pressurized your margins in the food segment. When it comes to the weaker rand, the negative, it's made importing machinery expensive, but the positive is it makes imports expensive as a whole, and that enhancing your competitive muscle. But it seems that it's the negative that's outweighing right here, specifically in the poultry division, which seems to be your Achilles heel right now.
It's very true. I mean, if you look at the business, we manage it on the three segments. The one on the agri-services side, which is equipment and grain management, has really done well for the 6 months. Financial services, extremely well for us. It's continue on the back of the new model with Land Bank really doing well for us. But the foods business, specifically on poultry, as you highlighted, it is one of those areas that we continue to work on. Obviously focusing on reducing cost in that area, focusing on making sure that we get it right from an operational point of view. And as the market turns around, it will certainly be to our benefit. It is cyclical. I think the big part unknown at this stage is potential tariffs in that industry. But also you have the feed price that will hopefully come down towards the end of the year, and hopefully that will bring some relief with it.
As you say, a lot of work has to be done when it comes to your internal efficiencies as well. Where exactly are you looking to become leaner and meaner?
Yeah, look, I mean, we look at the full chain. So we obviously start at parent stock, looking through the broiler side, the hatchery side, and into the abattoir side, which is actually the front end of the business. And we need to make sure that throughout that chain, we reduce costs, whether it's in terms of automation, whether it's in terms of actual production, utilization of water, across all factors and all fronts. We are busy looking at the streamlining the operation. We have done a lot already in the last 18 months, but we continue to look at areas to reduce costs.
Doing you some favor at this stage is the weaker rand. I mean, you've had your lower margins coming through. How much of a relief now does a weaker rand offer you? Because as we were chatting ahead of the break, we were saying that we're looking to the rand staying weaker for possibly longer than many had anticipated, and this, one would assume, allows you to be a lot more competitive with those importers that are bringing product in.
It's very true. We have seen over the last 2 weeks specifically that it has supported the price specifically. So obviously it does become more expensive for the importers to bring in product. It's not to the extent though that you can see already a big change and turnaround. I think our approach is to make sure that we don't rely on the weaker rand as a sustainable source of supporting the currency, supporting the sales value. So we still need to make a lot we still need to work hard internally to make sure that we can do that, and also we need to work hard with the industry players and government on the tariffs issue to make sure that we can have some sort of benefit there.
So let's put the focus there, because you've highlighted, and I mentioned this at the top of the show very emphatically in your earnings report today, that should the proposed additional tariffs and anti-dumping initiatives by government not materialize in the near future, an impairment of the group's poultry business unit is inevitable. How are those discussions progressing?
Look, what we need to do obviously is to make sure that we do, from accounting point of view, that we value those assets as we continue with the business. The important thing is then to say from a government point of view and from an industry point of view, what changes over time. I think the discussions are going well. Certainly there is an approach from all participants to see what can be done and how should it be approached. And we obviously participate as an industry player in those discussions. You know, how long it will take, I think that is the question. We don't expect any changes within the rest of our financial year towards the end of June to have real significant impact in terms of our numbers for the full year. But obviously we hope that closer to the end of the calendar year that we will have some relief and some support from tariffs.
So when you say that if these don't come or materialize in the near future, what kind of time frame have you?
Well, it's probably this calendar year. I think this calendar year will give us an indication. So towards August, September, October. It's more the principle in terms of the decision made by that will be made by government that will give us an indication. So if government makes a principal decision to support the industry, that obviously will have an impact in terms of how
Where are the hurdles? You know, where are the breakdowns in these conversations happening?
Look, I think it initially was to make sure that we actually advise government and obviously give them detail of where we feel there's, you know, that tariffs is needed. I can also understand from government's point of view that they want to make sure that they make the right decisions. You don't necessarily want, and the Minister Rob Davis has mentioned, you know, on a public forum that they are willing to look at it, but obviously the industry needs to come back to them with the support and with the support in terms of the detailed information. So that is really a process, and you need to follow the process to get it implemented.
Very quickly, Chris, you know, you've had your agri services and your financial services performing strongly, so that offering some buffer to the business. Having said that, I was speaking to a couple of traders at the desk this morning, and some have questioned your focus of the business, the fact that you have a lack of a core focus in the business. Now, there's a positive and a negative that can be derived from that. Given your experience, are you looking at streamlining a little bit more, or is this diverse structure here to stay?
Look, our focus is the grain value chain. So, you know, I think if they understand the grain value chain, they will understand the business. It's interesting because when poultry is doing extremely well, they want us to move into poultry. So we need to be careful in terms of the cyclicalities of the business, that we don't focus the business then in one area and the next time in the next area. So our focus is grain value chain, producer, storage and processing, and we will continue to focus on that value chain. Very
quickly, looking at your Africa operations, I mean, you've recently established operations over in Zimbabwe. You've acquired a 51% of an operation in Nigeria as well. Take us through that Africa strategy and where it stands at the moment.
Yeah, especially we want to obviously duplicate our grain value chain, as I just mentioned, across Africa. So we're looking at areas and opportunities that gives us footprint, and then from that footprint we bring in the other parts of the business. Nigeria is working well for us. That was implemented end of last year, calendar year. The Ghana operation is primarily a John Deere mechanization operation at this stage. Zambia is very much all aspects of the value chain. Zimbabwe very much mechanization. But I think in general we have a strong focus of expanding our grain value chain across Africa, and we continue to focus quite aggressively on opportunities.